Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 23rd of October. Markets are somewhat under the cosh at the moment. Obviously, we've got the conflict in the Middle East, which is gaining some attention. Also concerns around higher bond yields and indeed higher interest rates for a longer period of time than investors might have wanted. By the same token, the earnings season in the States has kicked off fairly positively. There have been a couple of exceptions to that rule, but generally speaking, about 75% of those companies that have reported so far have beaten expectations. Net result of that is that in the year to date, the Dow Jones is now up by 0.8%, S&P 500 by 11.4%, the Nasdaq by 26%, and the FTSE 100 has given up a lot of its gains, but it's just about in positive territory, up 0.5% so far this year. Turning to next week, the third quarter earnings season really does start with a bang in the UK, and the banks in particular. Obviously, we'll be looking out for the normal key metrics, the likes of return on capital, their capital cushion, and so on. We've got Lloyds, for example, current dividend yield around 6%, shares up about 3% over the last year. A few things to look out for here: the net interest margin, of course, based on the higher rates that we've been seeing. Any mortgage growth, it's a very big mortgage lender. On top of that, whether it sees any deterioration in the economy. Half-year provisions were £662 million, so let's see if that's something that Lloyds decides it needs to add to. And also growth in its digital business as it continues to close branches. Also got third quarter update from Barclays. Shares are up 2% over the last year, currently yielding about 5%. Have a look at the investment bank here in the States. That's been a sign of some weakness for its US equivalents, and also any increased spending on credit card balances as it was starting to see at the half-year point, and which prompted it to put its own provisions aside of some £900 million. Standard Chartered probably been the outperformer within the UK banks over the last year. Shares up about 31%. Dividend yield a bit more pedestrian, just over 2%. Obviously being Asia focused and with the Chinese economy currently stuttering, it will be interesting to see just how they're performing in that particular region. Finally, on the bank side for next week, we've got NatWest Group, which will be reporting its third quarter numbers. Shares down 4% over the last year. Current yield in terms of the dividend about 7%. And I think in terms of lending growth, it was fairly strong lending growth at the half year numbers. That's something investors will be keeping an eye out for. In terms of other UK third quarter reports next week, look out for Unilever and Reckitt. And certainly in terms of the States, that's also in full flow. Four of the Magnificent Seven are reporting. That's Alphabet, Microsoft, Amazon, and indeed Meta. While elsewhere in the States, we've got updates from Chevron, Exxon, IBM, and Ford. Thank you for watching. Have a great week.